There's a company that's 400 years old. At its peak, it was worth more than Apple, Microsoft, Amazon, and Saudi Aramco combined. Not added up, multiplied. We're talking about a valuation that, adjusted for today's money, would exceed $7.9 trillion. That makes it the most valuable corporation in human history by a staggering margin. And yet, most people have never heard of it. When we think about capitalism, about wealth creation, about the origins of corporate power, we usually think of the Rothschilds or the Rockefellers, names that dominate business school textbooks and conspiracy theories in equal measure. But there's a Dutch company that predates all of them. A company that didn't just accumulate wealth, but invented the mechanisms through which modern wealth is created and traded. This company created the world's first corporation, the world's first stock exchange, the world's first IPO. The concept of limited liability that protects your personal assets when you invest in a business. The secondary market, where you can trade ownership stakes, futures contracts, options, speculation, arbitrage. Every tool Wall Street uses today was invented or perfected by this company over 4 centuries ago. And it's still around, not in name, but in structure. Its DNA is embedded in every multinational corporation, every stock market, every investment vehicle you've ever heard of. The blueprint it created is the foundation of global capitalism. This is the story of the Dutch East India Company, known by its Dutch acronym VOC. And it's the story of the royal family that bankrolled it, shaped it, and used it to transform themselves from minor nobility into one of Europe's most powerful dynasties, the House of Orange. But this isn't just a story about innovation and wealth. It's a story about what happens when corporate power becomes indistinguishable from state power, when private profit motives drive public policy, when a company becomes so powerful it can wage war, sign treaties, and govern millions of people across continents. Because the VOC wasn't just a business. It was a sovereign empire with shareholders, and the world has never been the same since. Let's go back to 1580, to a moment that would reshape global power for the next 4 centuries. Spain had just taken over Portugal in what's called a personal union. 2 global superpowers merged under a single monarchy. Together, Spain and Portugal controlled vast territories across Asia, Africa, and the Americas. The union gave Spain control over Portugal's overseas empire, fundamentally shifting the balance of power across the seas. For the Dutch, this was an existential threat. The Dutch were technically part of Spain at this time, but they were locked in a brutal war for independence. The 80 Years' War, as it would come to be known, was tearing through the Low Countries. And now, suddenly, the Dutch found themselves facing a much larger enemy. With Portugal under Spain's crown, the combined Iberian power looked unstoppable. The Dutch knew they couldn't match Spain and Portugal with military force alone. The Spanish Armada was the most powerful naval force in the world. Spanish armies had conquered empires in the New World. So the Dutch built a different kind of weapon. Not cannons or warships, though they'd have those too, but something more powerful and more enduring. Private capital, organized at scale. In 1602, 7 private Dutch trading companies merged into a single entity. In Dutch, it was called the Verenigde Oost-Indische Compagnie, which mercifully gets shortened to VOC. In English, we call it the Dutch East India Company. On the surface, it looked like just another merchant company. European powers had been chartering trading ventures for decades, but the VOC was fundamentally different. It wasn't just authorized to trade. It was authorized to act as a sovereign power. The Dutch government gave the VOC a charter that went far beyond typical trade licenses. The company could sign international treaties, raise armies, build forts, govern territories, wage war. The VOC had armed ships, private armies, and fortifications across Asia. It could capture cities, execute prisoners, and enforce its own laws in territories thousands of miles from Amsterdam. But here's the most radical part. Ordinary Dutch citizens could fund this imperial expansion and profit from it. For the first time in history, empire building wasn't just for monarchs and nobility. Anyone with money to invest could buy shares in the VOC and participate in the profits of conquest. The VOC could scale in ways no kingdom ever had. It didn't need a monarch to approve every expenditure. It didn't need to raise taxes every time it wanted to expand. It just sold more shares. It issued bonds. It reinvested profits. It operated with a flexibility and efficiency that made traditional monarchies look ossified by comparison. This was wealth no longer tied to land or inherited titles. This was wealth manufactured at scale through markets. And it was about to change the world. Now, the merchants were running the company. They drew the blueprints, made the operational decisions, took the risks. But someone else was keeping the foundation standing, providing political protection, strategic guidance, and, crucially, capital when the company needed it most. Across the Dutch Republic, the House of Orange watched all of this unfold, and they saw an opportunity. The House of Orange was one of the most prominent noble families in Europe, but they were in a strange position. They held no kingdoms, no vast estates generating feudal income. They had a title, Prince of Orange, but it came with more prestige than power. They held a weak position in a republic run by merchants, squeezed from both sides. Amsterdam's merchant elites wanted stronger republican control, viewing the House of Orange as an unnecessary vestige of the old aristocratic order. Spain, meanwhile, wanted the entire Orange dynasty extinguished as punishment for leading the Dutch revolt. During the collapse of the old feudal order, the House of Orange faced a choice: fade into irrelevance or adapt. They couldn't rely on inherited land or feudal obligations anymore. They had to use the only thing they had left: capital. The House of Orange didn't run the VOC, but they bankrolled it. More importantly, they tied their family's future to it. This wasn't just a symbolic gesture. Their involvement gave them strategic leverage in a merchant republic where legacy no longer guaranteed power. Decades later, that connection became official. Two stadtholders, high-ranking officials in the Dutch Republic, named William IV and William V, were descendants of the House of Orange. They served as presidents of both the VOC and the West India Company, which traded with the Americas. They became, in effect, the most powerful men in the country, and arguably in Europe. As the company expanded eastward, the family rose upward. Still without crowns, mind you, but their power was backed by something more reliable than royal blood: dividends. The VOC carried the Republic's flag, but it also carried the ambitions of a family building an empire in silence. And that empire was about to become the most valuable entity the world had ever seen. The VOC didn't behave like a business. It moved like a sovereign state. And that was the whole point. At its peak, the Dutch East India Company was worth more than $7.9 trillion in today's money. For comparison, Nvidia, currently the most valuable company in the world, is worth roughly half that. Apple, at its height, was about a quarter of the VOC's adjusted valuation. This wasn't just a company, it was an imperial state with shareholders. During the VOC's golden era, from the early 1600s to the mid-1700s, over 1 million people left the Netherlands bound for Asia. They boarded fleets of East Indiamen, massive cargo ships that symbolized Dutch ambition. These weren't explorers or settlers chasing personal dreams. They were employees of a megacorporation. The VOC recruited sailors, clerks, soldiers, craftsmen, administrators. It built its trade empire across Ceylon, Java, Bengal, and beyond. This workforce ran the VOC's ports, guarded warehouses, negotiated with local rulers, and enforced Dutch interests, sometimes at gunpoint. Behind the profits was a massive human engine. 1 million lives, sailing across oceans to serve the world's most powerful trading company. But none of this scale happened in isolation. The success of the VOC stood on three pillars: a powerful state charter, Amsterdam's financial elite, and the strategic backing of the House of Orange. The charter carried far more weight than a typical trade license. It was closer to a royal mandate. It gave the VOC full control over Dutch trade in Asia, but that control extended far beyond commerce. The company could sign international treaties, raise armies, capture territories, and even govern entire colonies. Every move carried the weight of a sovereign flag, even though the orders came from a corporate boardroom. With nearly 150 merchant ships, around 50,000 employees, and a private force of 10,000 soldiers, the VOC didn't operate from the sidelines. It moved confidently, like a state with sales targets. From the Persian Gulf to Japan, it left its mark, and nowhere was its dominance more profound than in the East Indies. In 1610, the VOC gained permission to build a trading post near the Siliwon River on the island of Java. By 1619, they'd captured the city we now know as Jakarta and renamed it Batavia, after the ancient name for the Netherlands. This wasn't just a name change. Batavia became the center of gravity for European power in Asia. Dutch governors ruled from there for 300 years. It was the company's command hub, and all surrounding kingdoms and chiefdoms answered to its interests. You can still see Dutch influence across Indonesia today, in the food, the language, the architecture, the legal systems. The VOC didn't just trade with Indonesia. It shaped the country's identity in ways that persist centuries later. But this scale of operation needed more than bold vision. It needed serious money. And instead of relying on kings or short-term loans, the VOC created something revolutionary. A system where regular citizens could buy into the company and stay invested indefinitely. That's where the story of the VOC's reinvention of power truly begins. In August 1602, the Dutch East India Company opened its doors to the public. For the first time in human history, a company offered its future to ordinary people through the world's first ever initial public offering. But the whispers had begun earlier. The VOC had made its plans clear in March, when it signed its detailed charter. And once shares hit the market, capital flooded in. Think about how radical this was. Before the VOC, investment was personal and closed. If you wanted to fund a trading voyage, you'd partner with a merchant, pool resources with a few trusted associates, and hope the ship returned with profit. Each voyage was a separate venture. There was no continuity, no institutional permanence. The VOC changed everything. It offered permanent shares in an ongoing enterprise. You weren't investing in a single voyage. You were buying ownership in an institution designed to last indefinitely. And for the first time, those shares were transferable. If you needed your money back, you didn't have to wait for a voyage to complete. You could sell your shares to someone else. This created liquidity, which created confidence, which attracted more capital. Behind the VOC's success stood the same merchant elites who secretly ruled Dutch cities and kept money flowing like clockwork through Amsterdam's banks and markets. But that raised a larger question. What kind of power could convince competing wealthy families to put aside their differences and work together? The answer led back to the House of Orange. They backed this transformation, but they also depended on it. At home, political winds were unstable. Amsterdam's merchant class pushed for a tighter republican order. The House of Orange was fragile, locked in a strange role. Stadtholders with royal ambitions, but no throne. Abroad, matters were even more volatile. The Catholic superpower of Habsburg Spain still considered Dutch independence a crime punishable by fire. In this environment, feudalism offered no solution. The House of Orange had no serfs, no silver mines, no divine right. But they had a winning idea: rule through the market, not the crown. This was revolutionary. They decided to create an entirely new power base beyond land and precious metals. financial institutions that made risk predictable and profit systematic. At the core were permanent shares. For the first time, ownership in a global enterprise could be transferred freely. And this gave birth to the world's first secondary market, the Amsterdam Stock Exchange. The innovations didn't stop there. Soon, traders went even further. They weren't just buying shares, they were betting on future prices. They created markets for speculation and arbitrage, futures contracts, options, hedging. Every tool Wall Street uses today was invented or refined in 17th century Amsterdam. But behind the markets and the math, something else was needed. FOMO, fear of missing out. And VOC shares became one of history's first major cases of investment mania. From an index value of 100 in 1602, VOC shares rose to roughly 1,000 by the 1720s, a tenfold increase. Fortunes were made. The burger class grew wealthy. Capital flowed into Amsterdam from across Europe, and with that rise came an innovation that changed investing forever: limited liability. Before the VOC, if you invested in a venture and it failed catastrophically, creditors could come after your personal assets. Your house, your land, everything you owned could be seized to pay the company's debts. This made investing terrifying for anyone who wasn't already wealthy enough to absorb total loss. The VOC introduced limited liability. If a ship sank or a trade route collapsed, investors only lost what they'd invested. Their personal property stayed safe. Their families remained secure. Suddenly, people were far more confident investing. This concept is fundamental to modern capitalism. It's why you can buy stock in a company without worrying that the company's creditors will seize your house if the business fails. It separates personal assets from business liabilities, allowing capital to flow more freely. The VOC also printed actual share certificates, stamped, signed, and exchanged freely. For the first time, ownership could be traded, flowing smoothly from hand to hand, city to city, without royal permission or family inheritance. And here's what's truly wild. Dutch financial influence didn't remain confined to the Netherlands. It crossed borders, reshaping first Britain, then America, and eventually the entire global economy. This transformation was carried by ideas, institutions, and one man in particular: William of Orange. William was born into the House of Orange-Nassau and held the Prince of Orange title from birth. His early role brought him into the orbit of Dutch merchants and their financial innovations. His true impact came much later, far beyond the Netherlands. In 1688, England was facing a political crisis. King James II had lost the trust of Parliament and much of the population. Tensions were rising, and in that moment of instability, British leaders looked for anyone Protestant with a claim to the throne. They turned to James's daughter Mary, who happened to be married to William of Orange. William answered England's call. He sailed with troops and with a mindset shaped by the Dutch Republic, one that merged capital with governance, that saw markets not as distractions from power, but as tools to sustain it. This resulted in what history calls the Glorious Revolution. William and Mary took the English throne in a rare joint monarchy. But this wasn't just political reshuffling. It was a financial revolution. During William's reign, England launched the Bank of England, created public credit, introduced government bonds, and began funding wars through capital markets. These were Dutch innovations, now written into British law. The impact was immediate and profound. Britain went from being a second-tier European power to dominating global trade and finance within a generation. And it did so by adopting the Dutch model, using financial markets to mobilize capital at scale, funding state activities through bonds rather than taxes, and integrating merchants into the machinery of government. But the story stretches even further. Decades before William stepped ashore in England, Dutch ships had already crossed the Atlantic. In 1609, a ship called the Halve Maen, sailing under VOC authority, reached the harbor we now call New York City. A few years later, in 1624, the Dutch West India Company founded New Amsterdam at the southern tip of modern Manhattan. At first glance, it looked like just a trading outpost, but its layout told a different story. Organized streets, strong trade networks, diverse communities. The Dutch were turning the island into something rare, a commercial hub on its way to becoming the financial center of the New World. Amsterdam's influence could be seen in how credit flowed, how contracts were honored, how global trade linked this small settlement to markets abroad. In 1664, the British took over and renamed it New York. But they didn't wipe the city clean. They kept much of the Dutch structure, the legal systems, the financial habits, the commercial customs, because they worked. These systems blended into British practice and quietly endured. And when America eventually became independent, it inherited this hybrid Dutch-British financial DNA. Meanwhile, back in Europe, another shift was underway. In the 1600s, Amsterdam and London had very different financial personalities. Amsterdam favored banks and public credit. London leaned into speculation and fast-moving markets. By the 1700s, the two cities' financial elites began working in sync. Amsterdam's bank-oriented finance cooperated with London's market-oriented system. Together, they shaped a new kind of economic dominance. Dutch reliability in deposits and clearing met British innovation in securities and trading. This blend didn't stay confined to Europe. Through shared colonial ties, especially the Dutch roots of New Amsterdam and the British takeover, these financial ideas traveled west. New York inherited legal structures, credit customs, and institutional habits from both Amsterdam and London. That shared DNA quietly laid the groundwork for what would become the world's financial capital. Over time, those foundations transformed a port town into a financial engine. Not overnight, but through decades of inherited systems. New York absorbed the tools that made Europe's financial centers thrive and eventually built its own version. You can see the impact of Dutch financial systems everywhere today. From Wall Street to the City of London, from the structure of multinational corporations to how stock markets operate globally, the VOC's innovations echo through every corner of modern capitalism. But even giants have limits, and by the late 1700s, cracks were beginning to show. The company that once ruled the seas began to sink under the weight of its own ambitions. Power had scaled fast, but oversight failed to keep up. Corruption crept in. Internal divisions deepened. The VOC had always operated with a strange contradiction at its heart. It was a private company pursuing profit, but it was also performing state functions, governing territories, waging wars, conducting diplomacy. As the decades passed, these two roles became harder to reconcile. Officials focused more on personal enrichment than the company's long-term health. Decision-making grew sluggish, and competition intensified. Britain and France were building their own trading empires, and they were learning from Dutch mistakes. The British East India Company, in particular, became a formidable rival. And unlike the VOC, which was controlled by merchant families in multiple Dutch cities, often working at cross purposes, the British company had more centralized control. Military costs were rising. The VOC was fighting wars across Asia to maintain its monopolies. But these wars were expensive and generated diminishing returns. Markets that had once been enormously profitable were now contested, requiring constant military presence to maintain control. And global markets themselves were shifting. The monopoly model that worked in the 1600s was becoming obsolete. Faster, more flexible competitors were emerging. The age of corporate-run empires was giving way to the age of nation-state imperialism, where governments themselves took direct control of colonies. By 1795, the VOC was no longer viable. The Dutch government stepped in, nationalized the company, and assumed control of its territories and debts. The company had lasted nearly 2 centuries, founded in 1602 with a 21-year monopoly in Asia, finally winding down in 1796 when the government took over. The charter that once made it the most powerful corporation in history had quietly expired. But although the empire collapsed, its architecture lived on. Instead of vanishing, the VOC's ideas transformed into modern finance, legal structures, and multinational models we still rely on today. And nowhere is that legacy more visible than in the modern Netherlands. Today, the Netherlands is no longer a seafaring empire, but it's a financial empire. Its influence is felt in boardrooms, treaties, and offshore accounts worldwide. The Netherlands consistently ranks among the most competitive industrial economies on Earth. It's a magnet for global capital, drawing business from every continent, especially the United States. It ranks extraordinarily high in foreign direct investment, both inward, with over $4.3 trillion, and outward, with $5.2 trillion. Dutch holdings abroad exceed $3.5 trillion. That's an astonishing footprint for a country with fewer people than California. Behind this enormous network of capital, one family still casts a long shadow: the House of Orange-Nassau. They still reign. The crown may be ceremonial, but their connections are anything but symbolic. From defense to energy to corporate governance, the royal family remains deeply tied to Dutch industry. They quietly hold stakes in companies like Shell and maintain wealth through trusts and investment vehicles. They help shape one of the world's most powerful corporate forces. In 1907, a new titan emerged. Royal Dutch merged with Shell Transport and Trading Company to form Royal Dutch Shell, a name that would dominate global energy for over a century. Once again, a Dutch company carried not just capital, but a royal title. And Shell wasn't alone. ING Group stands as one of Europe's most powerful financial institutions, with roots tracing back to the Netherlands. Built through mergers in the late 20th century, its rise reflects long-standing Dutch financial strength. With operations spanning continents, it still leans on Dutch corporate architecture and legal protections that echo the VOC-era foundations. Without the VOC and its enduring influence, both the Netherlands and the world would look vastly different. The merchants and businessmen tied to the VOC have descendants holding stakes in modern corporate giants today. Some sit quietly on boards. Others shape policy through foundations and capital networks. Their surnames rarely make headlines, but their blueprints are everywhere, from oil to banking to logistics. When we think of capitalism, we often think of the Rothschilds, the Rockefellers, J.P. Morgan. These names dominate the conversation. But those figures didn't invent the capitalist model. They followed it. Long before them was the House of Orange and the VOC. They built the blueprint. They engineered a system where war, trade, and finance moved together as one integrated machine. But we need to be clear about something. This video has focused on the financial innovations and contributions of the Dutch East India Company. But it's critical that we also confront the atrocities the VOC committed, especially during its expansion across Asia. The VOC's legacy includes massacres, violence against indigenous populations, and ruthless exploitation of resources and people. The Banda Islands massacre, where the company nearly exterminated the indigenous population. Thousands were killed. Survivors were enslaved. The VOC replaced local populations with Dutch settlers to control the nutmeg trade. The Amboyna massacre, where the VOC executed English and Japanese traders on accusations of plotting to seize a Dutch fort. The Batavia massacre, which resulted in the deaths of thousands of Chinese civilians in what we now know as Jakarta. These are just a few examples. The VOC was a prolific user of forced labor, particularly in spice-producing regions, where indigenous populations were compelled to cultivate crops for the company's benefit. This led to widespread suffering and deprivation. The company frequently used violence to suppress resistance and maintain control over trade routes and resources. Military actions against indigenous populations, suppression of local political structures, destruction of competitors, all of this was standard operating procedure. The VOC pioneered corporate capitalism. It also pioneered corporate brutality at industrial scale. You cannot tell the story of modern finance without acknowledging that its foundations were built, in part, on exploitation and violence. So what's the lesson here? What does the VOC's story teach us about power, wealth, and the systems we've inherited? First, it shows us that the separation between corporate and state power is more recent and more fragile than we like to believe. For nearly 2 centuries, the VOC operated as both company and sovereign. That hybrid model seems strange to us now, but it was extraordinarily successful, and elements of it persist. When corporations lobby governments, when they influence policy through campaign contributions, when they operate in ways that blur the line between private profit and public authority, that's the VOC's legacy. The mechanisms have changed, but the underlying dynamic remains. Second, the VOC demonstrates that financial innovation is often driven by necessity rather than ideology. The Dutch didn't invent joint stock companies, limited liability, and secondary markets because they loved capitalism. They invented them because they were fighting for survival against larger, wealthier empires and needed to mobilize capital more effectively. Innovation happens at the margins, when existing systems can't solve pressing problems. The VOC's genius was recognizing that private capital, properly organized, could achieve what kingdoms could not. Third, the story reminds us that power concentrates wherever value flows. In the feudal era, power centered on land because land generated wealth. In the age of the VOC, power shifted to whoever could mobilize capital most effectively. Today, power increasingly centers on whoever controls data, algorithms, and digital infrastructure. The form changes, the principle remains. Power follows value. Fourth, the House of Orange's strategy offers a lesson about adapting to changing circumstances. They couldn't compete in the old feudal order. They had no vast estates, no divine right, no military might. So they pivoted to the new order, capitalism, and used it to rebuild their influence. Survival often requires abandoning what worked in the past and embracing what will work in the future, even if it's uncomfortable or ideologically inconsistent. Finally, the VOC's collapse reminds us that even the most dominant institutions eventually fail. Nothing lasts forever. The VOC seemed invincible for over a century, but internal contradictions, external competition, and changing market conditions eventually brought it down. Every monopoly ends. Every empire falls. The question is never whether decline will happen, but when and how. From the rise of the VOC to the reign of Royal Dutch Shell, we see a pattern emerging. Power and capital are inseparable. The House of Orange realized this early. Capital could be more potent than crowns. They transformed trade into a corporate-state hybrid and scaled that model across centuries and continents. They left a legacy that defines how the world governs money today. The Netherlands may no longer rule the seas, but Dutch capital moves across borders with more influence than fleets ever could. So that brings us to a question that still matters. If markets now hold the power once reserved for monarchs, who governs the markets? Who holds the crown when the crown is invisible? The VOC proved that corporations can wield sovereign power. The House of Orange proved that dynasties can thrive without kingdoms if they control capital. And together they built a system where money, not monarchy, determines who rules. That system is still operating today. We just call it by different names. And the families and institutions that control it prefer, like the House of Orange always has, to remain invisible. History has the answers, and the VOC's story teaches us that the most powerful forces in the world are often the ones we don't see, until we look closely at who actually controls the mechanisms of wealth, and why those mechanisms were built the way they were in the first place.